It's Monday, the 19th of March, 2012, and in this Boardroom Talk special podcast, Frank Thompson, the Chief Executive of Advtech, joins us. Financial results for the year to end December. Pretty solid stuff, Frank. 9% increase in headline earnings per share. I suppose more interesting from a overall perspective is your cash flow is even stronger, 22% higher to 66 cents a share. So the bottom line is things are going well overall. But we've had this conversation before. Your resourcing operations, which is only 10% of the company now, again suffering a reverse in this period. Are you closer to making a decision on whether to invest there in the long term or perhaps not to?
Obviously, it's a good and obvious question, Alec. We like the business. And in fact, if you think back to last year when we had a little bit of a setback on the education front, it was resourcing that grew well and contributed again to a steady overall picture for the group. The fact is that the resourcing, as we call it, or the staffing business perhaps, is profitable. It makes a very good return on capital, strong cash flow, not too much management attention, and it's a good contributor. Only 10%, which is an important point that you make. But we like the business, we like its contribution, we like what it does for us.
The reason I ask this is things do change in markets from time to time and in businesses. And as far as resourcing is concerned, you've got a lot of wind coming from government, unhappiness about labour broking on the one side. And secondly, resourcing under pressure from the internet, where more and more people think that they can draw their staff outside of the traditional channels. Does this not change your mind about the longer-term future?
Well, just to respond on the 2 points you raised, very interesting. On the labour broking or temporary employment services, as some people like to call it, we're not really involved in that side of it at all. We are concerned with finding new permanent positions for high-demand, scarce skills, as we call them, mainly IT, finance, and engineering. The role of the internet is, of course, very important, and we've embraced it. In fact, a lot of the business we do is now much more tech-enabled than even a few years ago, let alone 10 or 15 years ago. In the end, though, the role of the employment consultant is still to help make, hopefully, a perfect match between an employee or potential employee and the career that they're hoping to build for themselves, and an employer that's looking for a particular skill set. And some of the subtleties of finding the right culture fit, the right kind of ambition in the young person perhaps you're looking to hire, is not easily left to a machine. What we find is that the tech enablement has eliminated a lot of the, perhaps one might call it the donkey work, but that real expertise is still vitally important and still a place where we can add value.
And still, people are still prepared to pay for that, because it sounds a lot like travel agents. They will tell you that a travel agent can help in making the perfect holiday. But a lot of people maybe not prepared to pay up for that. And I was wondering whether you were seeing that in the recruitment field too.
No, it's most certainly a feature of the industry. And perhaps in plain vanilla recruiting, where it's a fairly standard skill set, doing a fairly standard job, absolutely the case. We tend to focus more in specialist areas where a particular mix of expertise, knowledge, skills, and experience is required. Maybe some more subtle skills needed. And for what it's worth, we keep going.
But people are prepared to pay for that, or continue to pay for that.
So we see.
I ask this because a lot more focus now has been put onto the education sector with the listing of Curo. And we see Curo going gangbusters, raising hundreds of millions of rands, making investments. Hardly a month goes by that they haven't bought another school. And you've got this side to your business that some might feel is not really core anymore. If you didn't have it, perhaps you would be giving a Curo, I suppose in your opinion, an even bigger hiding if you are.
Well, the answer to that really lies in the fact that the staffing side of the business does not absorb a great deal of management attention. It's got a great management team that is dedicated to that business and certainly has nothing to do with the education side, other than when we purposefully bring them together for this exchange of strategic insights that is useful and has a place. But essentially in running the business, we're not diverting any of our strategic focus from education.
All right, that's good, because in this last year you spent 188 million in total in the group. Curo spent that on one school. And that was one of their numerous investments. And I guess that's where the question comes up. Is Advtech investing strongly enough given the opportunities which others seem to find in the education sector?
Well, Alec, we've maintained some pretty high standards, I think, for the kind of investments we want to make. There are a series of key questions we ask about the nature and strategy of the business we're investing in, about the people we're investing with, before we even get to the financial questions which have to be answered to justify, I hope, any investment. And we're well satisfied with the way that has gone in the past. We've invested a lot of money over the last 7-8 years, and we've got ambitious plans to continue investing. And there's a consistent pattern through Advtech's recent history which will continue and suggests that there will be continued growth in investment. Interesting thing is that we've been able to finance that from organically generated cash flow by and large.
And that's another criticism, that you've either got a strong balance sheet or a lazy balance sheet in the eye of the beholder, virtually no debt. You've got all these assets on the book. Again, the contrast is now being made with this other company that's been listed in the stock market, which is borrowing like crazy to invest. Are you not concerned that perhaps you're being a little conservative?
Alec, I think the proof of that pudding will be in the eating. Advtech's got a long track record of building great institutions that produce fantastic academic results that are a sustainable future, both in the education sector and as a business. We plan to continue to do that. We have a way of going about our investment program that is consistently successful. Of course, it hasn't gone absolutely perfectly, but by and large, it's been consistently successful for a long time. We aim to continue going about our business that way, whether there are other players in the market, which there have been for years. This is the first listed competitor, but by no means the first or the only competitor.
Of course, Educor was listed and then taken out by Naspers. If you were to rank the private education organizations in South Africa, how do they stack up?
It's difficult to do simply because one is very seldom comparing like with like. There are, perhaps in education, an important rival or competitor, if you will, to some extent, are the semi-privatized model that the former Model C schools represent. The best of those are absolutely outstanding schools with a great history and legacy going back many decades, hundreds of years in some cases, that are great schools. Then there are the sort of famous and widely understood traditional private schools, often linked to a church or another religious organization, and frankly, all religious organizations.
Michael House, Hilton, Christian Brothers, that kind of
yes, and also the famous Jewish schools. There are the great Islamic schools throughout the country, not for profit, typically a single institution per entity, or single campus perhaps per entity. Then the fastest growing sector of education in South Africa are the very low fee private schools. This is a global phenomenon. It's been well researched in South Africa as well as elsewhere in Africa and South Asia. And these are also often nominally, at any rate, not-for-profit schools, very low-fee schools. And the mantra that I heard recently and interestingly at an IFC conference was a day's wages for a month's school, which gives you some idea of what we mean by very low-fee schools. Our view at the moment is that they typically do not offer much of an opportunity for a corporate. They tend to be run much more by so-called edupreneurs, teachers who have stepped out of traditional, perhaps state-funded education and figured out this is a way to make a living. So, and then there are for-profit companies, often started again by a visionary former teacher who's decided to start a school and get it going, and there have been a number of those. Trinity House, which was an acquisition of ours a matter of 3 or so years ago, was started by a group of teachers in exactly that way and built into a fine and sustainable institution that we're looking to grow the footprint of nationally. And then in the state sector, the higher education, typically the universities, are of course not entirely free as they are or used to be in many first world countries, the UK, for example, where there is now a fee, but for many years it was free. So always been a fee. And then both not-for-profit and for-profit private higher education institutions. So to judge who are the best competitors is, long answer to a short question, very difficult to rank them exactly. The only other listed player in the education space, and of course in the financial market analysis space, that means that Kuro and Advtech are seen very often as being the two main players. But there are many great institutions that don't have a high visibility.
But also in your market, Educore, are there many like that? As big as that?
Educore is, of course, privately owned by entrepreneurs in Natal. It's no longer part of the Nosper stable.
So they bought it out?
Yes, and that was quite a few years ago.
They've kept that quiet, that's for sure, because it was a big acquisition at the time, and I suppose it became a private company and so on. Is that your size?
Oh, no, it's a lot smaller.
So is that an opportunity?
Possibly. At the moment, they're certainly quite active in the competitive space for some of our post-secondary colleges.
I ask that because it's almost like the sizzle's gone out of Advtech. I hear what you say. You've got a strong balance sheet. You've managed this business conservatively. You've looked after shareholders' funds and delivered good dividend growth again. And we'll talk about that in a moment. Likely to have another dividend increase this year. But it's almost like your lunch is being eaten by these guys from Stellenbosch.
No, I wouldn't say that at all.
In the public perception, that is the case.
I think that's in a very small part of public perception.
Well, have a look at your ratings on the JSE. That's a big part of public perceptions.
Yeah. The proof of the pudding will be in the eating. We would argue that Kuro's main positioning is in a very different market to ours. And while there is some overlap, they recently acquired Woodhill School east of Pretoria. And that would certainly be a school that operates in a different space to the rest of Kuro. So there has been some activity. But the bulk of their business and the business design, as I understand it, has been to take something that is roughly equivalent to a Model C model at a former Model C kind of pricing and bring it to spaces where the current government investment program is not delivering for that population. With government's focus on the bottom 3 quintiles of the population, they are not building schools where the middle class is expanding.
So what I hear from you is that you're not going to be deviated from your path. You're going to continue to manage conservatively, as you have been?
Relatively conservatively, yes.
What kind of gearing would you be comfortable with, given that it's 3% at the moment, virtually non-existent?
Well, we've looked at the numbers and we've said before that we would be able to go to a third borrowing if we needed to. And we certainly have that capacity if we ever needed it.
So if an opportunity came across that was absolutely in your sweet spot, just for argument's sake, if Educore was exactly the right kind of fit for you, you would be comfortable in borrowing money to do a transaction like that, but you're not just going to go and spend.
Exactly.
Your share price has done nicely. It kind of bumped along for most of 2011, R5.60 to R5.80, and it's shot up really strongly in the past 4 months, peaking almost back to where you were in 1998, over R7 a share. Do you have any understanding or any idea why that would be?
Alec, luckily I don't have the job of understanding the markets as well as perhaps experts like yourself. What I would say is that given our relatively more pedestrian overall group results in 10, certainly, I didn't really expect that there would be a lot of development in the share price. With a more positive outlook, especially after our interim results 6 or so months ago, the market perhaps understood better the longer-term nature of what we do, the sustainability and growth evident in our model, and perhaps has rewarded us. But I can't explain it in any more detail than that.
I suppose it might also be, there's a lot of focus now on Kuro being the hot stock of the JSE. People sitting back and taking a comparison of the two and seeing, hang on, there's another stock in the sector that might have been overlooked. Do you get that sense from analysts today? Are you seeing more people than you were seeing in the past?
No, not particularly. And we have strong and I would say keen long-term institutional holders of a substantial percentage of our stock, more than half, They continue to hold. Many of them continue to grow their holding. No real change there.
And the dividend, you say you're waiting for clarity before declaring one.
Yeah, there was a surprise in the budget with certainly the quantum of the dividend tax. There are changes to the regulatory framework with reporting of dividends in the JSE and the nature of how one goes about that, together with the consideration which we have to think about capital distribution versus dividend and the way those are going to be treated and dealt with in the hands of different kinds of shareholders. So we have a board meeting scheduled for a few weeks' time where we're really going to get the expert advice we need and apply our mind to all the issues, and it was premature for us to do so now, as we normally would have preferred to.
But you will be declaring some payout to shareholders in April.
Well, I can't say we will certainly, but I'm pretty sure that the circumstances are all favourable for some form of payout, yes.
Is it likely to be in the similar ratio to the past? I mean, your dividend cover is not necessarily up for question, just the treatment by the tax authorities.
Alec, again, it's not appropriate to just give an outright commitment to that. Because of the changes to the tax regime, the actual numbers may vary slightly because of where a tax burden may or may not be borne and to what extent.
But if I'm a shareholder...
But broadly, I would say that it's unlikely that shareholders will be disappointed.
Yeah, that's the point. A shareholder doesn't really want to know that they're not going to get the dividend income that they've been relying on, perhaps. And that clarity, I guess, you've given us now to say you're not going to be disappointed.
I can say that with confidence, I'm sure.
And in the year ahead?
We are very excited about the opportunities that lie ahead. A large part of the investment we've done in the last 2 or 3 years has been in the tech space. We've invested a great deal in strengthening and enabling our business and our education services to be more powerfully orientated to the world of technology. So far, that is mainly delivered in the area of administration and student management and student interaction between students and staff and between staff and staff. But we are now rolling out the beginning of tech-enabled teaching and learning. This is going to change the way we interact with our present students as well as the way we interact with new students both in South Africa and further afield. We are very excited about the potential that brings, together with growth in existing campuses and new campuses for existing brands. So there's quite an exciting growth story ahead of us and some very exciting projects in the pipeline.
Frank Thompson is the Chief Executive of Advtech.